Okay, so let's start off with some practical, real world questions about business. Okay. Most of us shop regularly. We know kind of what to expect when you go into a store. So let's start with this question. Why do businesses accept credit cards and debit cards? What is the benefit for the customer and for the business? Anyone have want to volunteer any ideas? Okay, so you're saying for the customer, you can potentially use credit, right? Okay, so that's true. The person who's selling you the item, the merchant, is actually getting their money right away. You can pay later, but the lender is some other party. It's not like, Best Buy is lending you the money when you go buy an iPhone there, right? It's some bank that you have the credit card with, right? Okay. But yes, you're right. It did facilitate the transaction because if you didn't have the money and you needed to borrow to buy it, the merchant benefited because you were able to buy it right now instead of later. Okay? Yeah, that's one. Yeah, exactly. Okay, so for the business, it's a benefit because there's less cash handling. Okay, yeah, so it's a prevention of theft from the employees, from third-party thieves, right? So yes, that's definitely a benefit for the business. Well, again, the merchant is not the one who's lending the money, right? If you get a credit card from Chase Bank, Chase is actually going to pay the merchant up front, and then you owe money to Chase. You don't owe money to wherever you bought the item from, right? So, but yes, in general, for the customer, it gives access to credit. Okay, what else? You guys didn't exist when you had to carry around a bunch of cash. Um, but for the consumer, you just don't have to have this bulky paper with you, right? You have one credit card and you have access to all your kind of your whole bank account. You don't need to have the physical stack of cash with you. For you, the consumer, right? Yeah. Again, the theft thing too. If someone steals your credit card, you can just call and have it canceled right away. But if they steal your cash, it's gone. Okay. So what companies are involved with this system? So we mentioned one of them, like Chase Bank, right? They issue credit cards, but are they the ones that are kind of facilitating the whole network? What are the companies involved with that? You see it on your credit card. There's two big ones. Credit union, yeah, they can issue a credit card also. So just like Chase Bank, just like Wells Fargo, um, Capital One, these are like credit card issuers. But are they the ones that facilitate? Are they connecting the merchant? Are they connected to all the merchants directly? How does that work? Yeah, exactly. Exactly. So these are credit card networks, right? Visa, MasterCard, they're the ones that facilitate when you swipe your card, it's through their network of communications, financial kind of this communication network for financial institutions that connect Chase to Best Buy. And, Best Buy will say, hey, is this card approved for $500? The Visa MasterCard network is facilitating that communication between the issuer of the card and the merchant. And they charge a fee for that, right? That network communication, they're gonna take like a little piece of the transaction amount. Okay, so they charge the bank makes money through charging you interest. If you have a credit card, if you have a balance, they're going to make money most directly by um, basically charging you interest on any debt that you have outstanding that you don't pay off at the end of the month. Visa, MasterCard, they make a piece of just the transaction. Okay. So when you pay $500, not all of that is going to Best Buy. They're paying some of that to, uh, you know, the the fee for swiping that card is going to bank partially. There's like some sharing agreement between the bank and Visa, Mastercard, which is why Costco. I don't know if people have noticed. I think it used to be Mastercard, now it's Visa, or vice versa. Exactly. Okay, so it used to be American Express, now it's Visa. Is that right? And the reason why is because Costco is like, well, you need to give us more of this interchange fee because they know that they generate so much volume for the credit card network company. So Amex runs one, Visa, MasterCard. These are all competitors. So Amex was not willing to share as much of their profit with Costco as Visa was. So Costco said, "Forget you. We're going to switch to Visa." Okay. So it's because they're trying to divvy up the share of this interchange fee that gets charged when you swipe your credit card. Okay. So again, the parties that make money are really the network operator. So Visa, MasterCard, Amex, Discover, which no one really uses, but it's one of the other ones. The bank, if you don't pay off your balance, they're going to start charging you interest. So that's how they make money. And they also can negotiate to get, they're like when you have a cashback credit card, it's not really like cash back. It's like they're just kind of giving you back some of the interchange that they make because of the total amount. Some of it Visa and MasterCard take, and some of it credit card company takes, and they're just kind of giving you that back to incentivize you to use their card essentially because they're hoping that you're going to keep a balance on it. They'll earn interest. Okay. Okay. Any questions on this? This is like this payment processing world is like very deep. Okay. Now there's competitors to this, Visa, MasterCard kind of duopoly. Like when you use Apple Pay, if you use Zelle, these are all ways that are bypassing Visa, MasterCard network. Okay. So now they have competition that's outside of the traditional credit card kind of game. Yes, exactly. Yes. Like when you pay each other through Venmo, there's no fee, right? Like when you pay your friends, it's because you've bypassed Visa, MasterCard. You're just doing it through their kind of payment network. Okay, so this is a little dangerous for the Visa, MasterCard, but they still have like massive amount of the market share. These other things are much smaller. Square operates like the device, but they're using the same payment processing. Like they're still swiping a Visa or MasterCard credit card, right? So they're paying the fee that they charge is also just for having that point of sales device and interacting with the Visa MasterCard network. So yeah, so there's some fee that's charged, and it's all divided up by all these parties: the credit card company, Visa, MasterCard, the point of sales device operator. All these parties are kind of sharing that fee with different agreements between them. There's a lot. I mean, this is a huge industry because it's like how much volume of like transactions happen in the economy. All these companies are taking some percentage of that. So as long as there's people buying and selling things, these guys are always going to make money. So it's like a great business if you can get in, but it's obviously like creating the network is very difficult. Okay, so let's talk about how to account for this. Um, so again, most businesses accept these payments, and it's beneficial for them because their customers kind of demand it now. Now it's like the standard. There are some, maybe some restaurants, some very niche, high demand people can just demand cash. But for the most part, most people selling anything are going to accept this because it's like what the customers kind of expect. Okay, um, we should learn about how it's accounted for. Um, Okay, so there is some point of sale system that's used. So you have to swipe the card, or now we have, tap payment. But that device is somehow going to interface with the payment network. Okay. There's two ways that you can account for the fee. So let's say the fee is like 4% of the transaction, which is not kind of too crazy. Debit cards are cheaper. Okay. I don't know exactly the details of why that is, but when you swipe using your debit card, the merchant, meaning the person selling you the item, is going to pay a much lower fee. And it could be because there's less uh, gateways because it's like it's going to just check if the money's in your account. There's no bank, like third party bank to interface with. I don't know the reason, to be honest. But debit cards are going to be like some fraction of a percent. The credit card swiping, Amex, for example, why a lot of merchants don't like to take Amex, they charge like 4 or 5, 6%. Okay, so they charge a lot. But their customers, who has Amex cards? Are they people with small credit limits or large credit limits? Usually large, right? So if you are selling Gucci bags, you probably will take Amex because the customer is maybe going to have an Amex card, and Amex offers really good benefits to their cardholders. So people that are, have more money, they want to have an Amex card because, all the various perks you get with that. So if you are a merchant and you want to attract those customers, you also have to accept Amex and just pay the larger fee. Okay. But not, like a lot of merchants are not willing to do that. Okay. So they're like, we're not going to take Amex, right? Because the fee is too much. Okay. So basically some percentage of the transaction is going to get paid as an expense to this third party kind of uh, payment processor. Okay. So we have two ways that we can account for that. The net method is that in each sales transaction, we will account for this fee expense. It's an expense in that sales transaction journal entry. Okay. Um, the gross method is that when we first journalize the sale, we assume that we're going to basically, if the sale was for $500, we assume that we get all 500, and then at the end of the month, we pay. The credit card processor will give us a invoice, and we pay it at that time. So that it's kind of like a end of the month. It's not quite an adjusting entry because it's a real expense. It's not like a deferral or an accrual, but you will at some point actually pay that expense and account for it then. Okay. So again, the net method is all in one shot, just accounting for the expense when it's exactly when it's incurred. The gross method is accounting for it kind of on the back end. Okay. So let's look at an example. So we made a $3,000 sale on this date. There's a 4% transaction fee. Okay, so the net method, we record the entire amount of revenue. Okay, because this is actually the amount of the total value of the sale is 3,000. It's just that we have now this expense associated with the sale. Okay, so we're gonna have the credit card transaction fee right here, 4%. It's a debit, just like all expenses are. And then the amount of cash that we're going to have kind of deposited into our bank account is the remainder. Okay, so this is, again, now you can understand from the perspective of some merchants, especially small businesses, they may be like, oh, if you could pay in cash, right? The reason why is because they want to avoid this. Okay, they get the full amount of the sale if you pay with cash, or if you pay with the debit card, the fee is much smaller. Okay, so there are yes, we discussed some of the benefits they have. They also don't have to deal with the cash and like the security around that, but they're also paying a fee for it. So they would prefer you to either pay with the debit card or probably checks now are not really accepted because those checks have their own problems. Um, but yeah, if you're like homies with your local corner store or whatever, you should always pay with the debit card. That's the cheapest for them. They got to keep more money for themselves. Okay, and definitely don't use your Amex card. That's like the worst for them. So again, this is just one method. This is the net method, meaning in this transaction, you expense it right here. Okay, at the same time that you're recording the revenue. Okay, now the gross method. Okay, there's two separate journal entries you can say. The first one, you're gonna just take all the cash in. Okay, maybe you've set it up with your credit card processor where they're gonna give you all the transaction amount up front, and then they're gonna bill you at the end of the month or something. Okay, so in that case, you're gonna use this gross method. You're gonna get all the cash, and then at the end of the month or whenever you get the invoice, you will then pay out the cash to you'll write a check or whatever to the card processor, so Square or whoever, and you'll record the expense at that time. So the net effect is still the same, right? Because in this case, you would have had cash 3,000, and then you would have had this cash come out 120. So you would still end up with 2,880, just like you had here, right? But it's just two separate transactions. So the net effect is still the same. It's just like kind of two different methods depending on maybe how your payment system is set up that you can do it.